over the last 2-3 trading session. Shockingly, you have gold that has scaled a new all-time high, and not just that, you have Bitcoin that surpassed 42,000 to the $42,000 mark as well. We have Sharad, who's here to tell us what is happening over here and why such a silent move. Actually, we've been focusing so much on Indian markets that we actually didn't see this coming, isn't it?
Yes, a very silent move, you could say. And of course, not only gold, is Bitcoin also. And of course, last year this asset class was not so much discussed. But let's talk about gold, how the movement has happened. It has breached the levels of more than $21,500 a mark. And do remember that the Fed commentary is expected to be dovish. And the trader community is expecting that there would be a rate cut expected next year going ahead. Because of that, some indicators are there, especially the dollar index as well as the 10-year treasury yields. That has also come down, and because of that also we can see the Brent gold actually going up at near its fresh time high levels. Apart from this Bitcoin, that's the number which you're looking at. It has breached the $42,000 mark, and this is the highest level seen since April 2022. And of course, two important reasons coming for it. First is the expectations of the interest rate reduction, and also a greater demand coming from the exchange traded funded, and also the global crypto market that has also increased by almost 2 to 3% over the last 24 hours, with the market capitalization of more than $1.5 trillion.
Yes, great gains coming in on gold, but with this, let's go across and listen out to why Samir Arora still has gold in his portfolio and what his rationale behind it.
Still has gold in his portfolio. A quite sizable part of his portfolio is gold. Actually, find out how much of gold in his portfolio does he have.
Regarding gold, which I actually own reasonable amount in my personal portfolio, some 8-10% of my portfolio. Broadly, I used to think that these high interest rates won't help gold, and I was getting ready to sort of sell it off. But then realized that these US depreciation expected, and also these geopolitics and all, means that gold should actually be there for long, forever. I have held it since 2008 or 7. That actually it is supposed to be bought and forgotten.
All right, so that is Samir Arora, and like I said, sizable amount of chunk in gold in his portfolio. Approximately 8 to 10% of his portfolio he has gold, and 60 to 70% of that is in actually equity. But let's talk about the asset classes altogether then, actually, Sharad. And yes, like we've seen Indian markets move higher, gold has surpassed $2,100 per ounce mark. Back home, you have gold at record high levels. But what have asset classes done over the last 1 year?
Well, if you're an Indian investor, dollar terms, let's compare Bitcoin and gold. This year itself, 2023 year-to-date returns, if you look at it, Bitcoin has given more than 150% returns. But do remember that the exchanges or the traders, which the Bitcoin traders are, still the volumes are really very low because of the regulatory and the taxation issues. Looking at gold, internationally it's up 12%, and if you look at the domestic MCX gold prices, that is also up almost 15% this year. Now, if you had invested in Nifty, the returns would have been roughly 15% this year. But the broader indices, that is where we see action coming in, with the Nifty small cap index and the Nifty mid cap index giving returns between 40 to 49% this year. But clearly, Bitcoin has been one of the top asset class in terms of performance this year.
All right, so those are, that's the way how the asset classes have actually performed in the year gone by. But this year itself, we are just in the last month of 2023. But yes, a great move, surprising move coming in for Bitcoin, 152% uptick coming for Bitcoin, gold as well, 12% up move coming on that particular account, that particular asset class, and Nifty, as you can see, 15% uptick coming in the year 2023. But what does this mean for your portfolio, and how should you actually go ahead and diversify your portfolio? Or for the matter of fact, is it the time to look at gold-linked stocks? Let's bring on board our guests for today. We have Kunal, Bothra, as well as Shahina Mukadam joining us. A very good morning to you, Shahina, as well as Kunal. Thank you so much for joining us in ET9. And Kunal, actually, I'll start this time the discussion first with you, because I remember very clearly earlier on in this year, when we spoke about gold in particular in Buy Now, Sell Now Lens itself, you said that you had a target of about 70,000 rupees when it comes to the Indian gold, the MCX gold. Are you happy right now? I don't think all of us are happy as consumers when we look at the gold prices. And as I think as a spouse, you should also be a little concerned, no, with the high prices.
I think first of all, I think you should be happy. I'm sure there's some portion of gold which is definitely there. Yeah, you may always complain that you may not have invested full throttle as per your expectations, but then that's what investing is all about. Now, in terms of the view going forward, I would still believe that gold as an asset class would continue to perform very well. I'm not, saying that this asset class would perform exceptionally well going forward, and then it could probably beat the returns for equities over longer term. I still believe that equities will always have an upper hand given the longer term time scale. But I think gold also as an asset class should have some portion in terms of everyone's portfolio. I think currently from the chartical perspective, silver is something as an asset class which looks very attractive. In dollar terms, it's given a very big breakout of a falling trendline resistance, and I believe that that's an asset class which could probably hold a lot of significance going forward. So maintain that bullish stance for both the asset classes, gold as well as silver.
Okay, continue to be bullish on gold as well as silver. But Shahina, coming to you, gold is always dear to the ladies. But as an investor, wanted to know that were you able to participate in the kind of a rally that we have seen in the gold in this particular year, and what is the outlook ahead?
I normally buy gold as just for enjoyment. So I don't really look at it personally as as a very good investment opportunity vis-a-vis equities. And as you've seen, like for example, if you had invested in Titan, 15 or 10 years back, and you compare it with the return that you got from gold, I think Titan would outperform. So in a similar way, as we've even seen in the current year, the small cap, mid cap have outperformed, by a huge margin to gold. Having said that, I do agree that gold for an investor who's looking at the long term to hedge his portfolio could have a small, portion of his portfolio in gold, because yes, it has liquidity, and it has, given the current scenario in terms of geopolitical issues, the dollar depreciation, yes, gold can form a small percentage of your portfolio, but at the same time, I believe, a larger part should remain in equities. And as far as bitcoins go, I think it is extremely risky, and it is best left to, extremely risky traders. So a normal investor, I believe, should not really dip his hands into Bitcoin. But of course, you can invest a bit in gold, and you have equities. You can look at equity stocks which are linked to gold, like for example, Titan, which is extremely expensive currently. At the same time, given the return ratios, given the performance, given the way the company has expanded in terms of its product book, I think to that extent, you can look at any dips, any major dip you get to add it to your long-term portfolio. And you can also look at other, stocks which are linked, like for example, Manuparam Finance. So I think to that extent, you can look at other companies which are linked to gold to remain sort of get that opportunity also.
So those are the picks that or ways how you can also participate in this gold rally. In case you have not actually already participated in it, you can look at gold financiers, at least is what Shahina is saying. But on that note, we slip into a break on this edition of Buy Now Sell Now. Before we do that, actually, we seen a sharp rally in the markets. But what are your market pundits saying? Is it time to shift your allocation from the small caps to the large caps? Listen in.
India as a country has outperformed over, as I keep saying, 5, 10, 20, and 25 years. It is number one in the world in US dollars, and in over 15 years is number two. Now, coming to within India to try and outperform that index, I think large caps will do well. A, because it is easy for new investors, particularly foreign investors, who are looking at India seriously, not only because India is doing well, but because they are getting bugged out of shape in China. The larger cap financials is the easiest to buy. They're also a large part of the index. So even if these guys underweight, overweight, they still have to put, if not 30 odd percent, then 25%, but all that has to go into the same large cap names. And within those three groups, which is financials, consumer, and IT, it is easiest to buy financials because they are doing well and the stock prices have not done well. And then there is IT, which is not doing well and where the stocks have actually done well this year. And then there's consumer, which anyway is more difficult to buy because they are always on paper looking expensive with normal growth. I'm talking about the big consumer guys.
I think what's happened is a lot of retail frenzies happened in mid and small caps. This is investing is also about your downside protection. Look, the retail investors have made a lot more money than kind of a circumspect institutional investors like us. But what institutional investors do is do a bit of a downside protection also. So I think that is where it makes sense, having made so much money in these mid caps where valuations are expensive, growth is yet to rebound. It makes more sense to move to the large caps where the risk return is a lot more favorable and your downside is lower. Should globally there be an accident, look, you can protect your capital a lot more.